Hey, Dan Passarelli here. You know what we haven't talked about for a while? We haven't talked about interest rates. So let's talk about interest rates right now. This morning, Bloomberg News reported that there was a trade that went up recently where the trader would make money if the Fed cut interest rates 300 basis points over the next 9 months. Now, that's a lot. That's 12 25 basis point cuts, meaning probably at some point they cut more than 25 points at a time, 50 points, 100 points maybe. So why would this trader be thinking that? Well, before we get to that, let's point out that that's not what most traders are thinking. And over the last year or two, we've seen some pretty weird and crazy bets going on in the interest rate complex. That said, most traders are seeing 75 basis points being cut over the next 9 months. Now, when people were saying that at the beginning of the year, I thought they were crazy. Turned out I was right, and they were crazy. But now I don't think that they're that crazy. I think that it's pretty realistic at this point. Why? Well, a couple of things. Because some of the Fed governors were talking recently about how the labor market is getting weaker. Now, when the labor market gets weaker, that's a pretty bad sign for the economy as a whole. They start laying people off. We could end up in a recession. Now, let's get onto the inflation front. Inflation's still stubborn. Sure, it's come down, but it's still above the Fed's mandate. So the Fed needs to continue to fight inflation, but more importantly, they need to fight, or I don't know if the Fed feels it's more importantly or as importantly, they need to fight us going into recession. So the Fed could be forced to cut rates somewhat even before inflation is showing signs that it could get down to the Fed's mandate level. So if that happens, what could happen is what is called stagflation. And that's what I'm worried about, is when we have a stagnant economy with inflation. It's sort of the worst of both worlds. So with the stock market at near all-time highs, and with the stock market at somewhat elevated PE ratios, and with a gap here on the S&P 500 chart, I think it might be time for a little bit of a pullback. Now, I'm looking at this and I'm playing it very, very cautiously, and I'm looking for other catalysts before jumping into the trade, but that is a trade that's on my radar, and I'm going to be continuing to look at the technical setups for that so that I can scale in to a trade that makes money if and when the market heads south for a bit. Hope that helps. This is Dan Passarelli, Trade Smart.